All right. Welcome back to the Built to Grow podcast. I'm your host, Tim Lyons, joined in studio today, as always, by Randy Angston. What's up, buddy?
How are you doing?
Doing well. Okay, good. A special episode today. We have a guest. He was a Nashville Growth Summit vendor, a sponsor of the show. Shawn Hanquist is here. He flew in just for this show from Nebraska, not Lincoln, but Nebraska. He's the owner and founder of FIT CFO. Welcome to the show, brother.
Thanks. Thanks, Randy.
Thanks. You sound so excited. Well, I guess that's the numbers guy coming out of you. Like,
yeah, I'll give you a little more credit than that.
Well, you know, accounting people, they're not like the most dynamic. And that from my experience, at least.
And not many of them have beards and tattoos. So
that's true. That's true. So Shawn, you work with gym owners, you work with online fitness coaches. You are the numbers guy behind the scene, helping people understand their P&Ls, their numbers, projections, all of that fun stuff. What got you into the business? Give us a little background on you real quick.
Yeah. Finance and fitness has just been my thing. I love it. Been a gym owner back in the day, always been in the wealth management space. So numbers has been my thing, and trying to put the two together. Trying to get the two together, right? So the fitness side of things, I understand that there's a huge need out there. Make this world a healthier place.
There you go.
Sure. Yep.
Right. And maybe I'm not directly working with the individuals out there, making them healthier, but if we can work with business owners, make them more profitable, you get their business bigger, they're going to be able to help.
Right. More people.
Yeah.
Right.
This goes back to a podcast we did last week. Was, you know, as the role of the gym owner, right? That exponential effect. Maybe you're not the one training every client, but you know, the number of lives you can touch, right? You're in one of those positions where you can play wider just by helping the business owners themselves as well as the end user.
Then absolutely living the lifestyle. So, I mean, I'm in it.
Yeah.
I love the health and fitness space. I do bodybuilding shows, and, you know, it's one of those things that maybe it's not going to be where I make my living, but I can be in it.
And if you guys are watching us on YouTube, you will notice Shawn's, he has dropped the average body fat percentage at the table by like 17 points for just being here. So I appreciate you helping the body fat percentage.
He does look the role.
He's looking shredded, brother. Well, that's cool. So you were a gym owner, which is funny. I just learned that just before the show. I think you said you opened Anytime Fitness. You probably jumped on the bandwagon. I think back in 2008, I was an 08, 09 gym owner myself, and being part of that kind of Anytime Fitness world, that's what I wanted to open up back then. I think I told the story a few times where the franchise rights were kind of taken in the States, so I couldn't do it. So I kind of did my own thing. But I had to learn financials really early. And, you know, one of the funny things is, you know, unless you went to a school for like business, you know, and you have that one accounting class, Accounting 101, right? You get into the real world and you got to manage finances for your business. So like, give everybody, like, where would somebody go if they're a gym owner listening? Like, man, I really wish I could learn more about financials. Where would they go?
Yeah.
YouTube?
FIT CFO.
Oh, yeah. Do you have a website that has educational stuff on it?
Yeah, we do. We put out a lot, blog, podcast, try to help out as much as we can. Give it all away. Like
FITCFO.com.
FITCFO.com.
Okay. So on there, you have like educational stuff.
Yep. And another thing I do want to mention, a lot of us business owners don't lean on our financial professionals probably enough.
Sure. Okay.
The more that clients have leaned on us, the better success they have, the more they get it. Yeah. We're here to serve you, just like if you're working with a CPA in your state or accounting firm in your state where you're at, lean on them, ask them for help.
You know what's funny? And I'm going to throw this out there. I'm going to take a wild guess. Gym owners, fitness coaches are probably pretty nervous sharing financials with a stranger.
Yeah. Probably the biggest anxiety.
Yeah. They don't want to share and be judged and like, hey, maybe I'm not doing as good as I really think I am because they never really looked at it. Yeah. What would you tell somebody?
It's better to get naked quick.
Yeah, amen.
Really? Yeah.
I mean, if we don't know the whole story, we can't really help, right? Or we can't help as good as we should be able to.
Yeah.
We got to have the whole story.
So just like when you're working with a new client at the gym and they come in for the first time, they're super scared. It's not like they're gonna get naked and you start pinching them and call them all fat. So are you gonna say, "Hey, man, your financials suck, man. Like, what are you doing?"
No, you are where you're at, and you don't know what you don't know.
Right.
Yeah. I think that's the other half. I think a lot of fitness professionals, gym owners, don't know the numbers that they should be looking for or looking at.
I didn't have a clue when I had my gym.
Yeah.
And I sure in hell didn't lean on corporate at all, which they probably were there to help me.
Yeah.
I was just too, I knew how to do this.
Too young and dumb and didn't want to know. Okay. So, one of the things I before reading the book Profit First, I'm sure you've read that book.
Yeah. I love designing that model within the gym space. Yeah. I mean, it's a no brainer. Mike McCowitz, I would have to say when I was first launching my firm, that was kind of a gateway into here on how I could help the gym owners.
Yeah. Okay.
And online coaches, because they need some way without doing this boring budgeting thing.
Yeah.
Yeah.
Right. But
It's a forced budget. It's an envelope system is what the way we anyways, my point to that is before reading that book, I was going through my P&Ls with my mother-in-law, who's my accountant, bookkeeper, right?
Yep.
Like, and we made X and I'm like, "Hey, Madeline, is this good? Are we doing good?" And I didn't know because there was nothing out there that told me as a gym owner, new in the business, like, "Hey, these are where you should be trying to hit. In the average industry profit margin is this, and the average industry gross expenses for rent should be this, some percent." Right. That's the only book that's ever told me that.
Yep.
Now, that being said, I'm sure gym owners want to know, like, what in the brick and mortar space, training gyms that you work with, probably CrossFit based type of gyms, what's a good net profit margin?
Yeah. Net profit margin is obviously one of the biggest KPIs you could possibly track. And what we've seen is about that 25% number.
Okay. Mm-hmm. That's great, right? That's a good number.
I would say if you could get there, you're probably not going to have a problem in business.
Okay. So let's go back and just say, okay, 25%. Now, how would somebody looking at their P&Ls, like how is that number created?
Yeah. The P&L tells a pretty good story. You're going to have your gross revenue, which that's probably the number one KPI because we realized that nothing can go down below the revenue if you don't have any revenue.
Yep.
And
most gym owners know what gross revenue is. Like that's how much you deposited this month. Okay, got it.
You have to have that first, and you have to focus on growth, right? And then gross profit margin. And I have a feeling that most people miss this part of it, and that's the cost and fulfillment of your sales.
Yep.
And if you have a bad profit margin, there's not going to be a lot left over to come back down to the bottom line. Gross profit margin is not going to necessarily change just by scaling.
Sure.
It's always going to be a bad number because it's a variable cost within your business.
Sure.
So you have to have gross profit margin down. Now we go down to the fixed expenses within the business. And yes, they can vary, they can change, but generally fixed expenses are going to be your employees, your marketing, your software, all that. And then at the end of the day, you have your net income. And that number is going to need to be at least 25%. I would shoot for 25% of that gross revenue.
Yeah. Nice, easy place to start.
That's a good place to start. And sometimes I don't want people to feel bad. Maybe they might be at 15, 18%, but you could take it a step further.
What if they're at a loss right now? They're negative.
Well,
that's a lot of people right now.
And then, you could take it a step further and actually add back in the owner benefit and look at how much you're paying yourself in a salary. Look at how much of your owner benefit, the perks of owning the business. Mm-hmm. You add that back in, you might be running at a 10% profit margin, but you add that back in, you're at the 25, 30% range. So there's more to the story than just looking at the net income.
And that's something I want everybody to kind of understand. There's owner benefit, like your gas or your cell phone that you use personally, but you kind of run it through the business, or maybe even health insurance or some of these other things that you might run through the business. It's a benefit to the owner. Mm-hmm. It's an expense of the business, which mm-hmm. then in turn reduces your net profit. But if you were to take that and put it back in, be like, hey, okay, if I didn't do that, right, these wouldn't be expenses, and therefore my net profit would be higher.
Yep.
That tells a better story. It's kind of what you're saying, right?
Yeah, a lot better story. And then we were taking a step further with the profit first model is amazing because you can keep track of your cash flow. And there's also a bigger story to just the net income on how well you're doing. And you're talking about some business owners not doing very well, like negative cash flow in this environment. You have to be able to know the net cash flow of your business.
Well, cash flow is the lifeblood of your business, period.
Yeah. I have a lot of business owners that come to me that maybe are running a 25% or 15% net profit margin, but they don't know where all the money's going. They forget about the capital expenses they've built out over time.
That don't show up on the P&L? Is that what you're saying?
Yeah. That doesn't show up on the P&L, does it?
Okay, let's hit this a little bit harder because this is something that blew my mind. Okay. Madeline, we're showing this percentage profit margin and my bank account isn't showing any money in there.
Why is it not reflected? Yeah.
And I was getting on her case. Like she was doing something wrong. I'm like, what are you doing? This is not, this isn't correct because there's no money. Yeah. Like, where's this money?
And I'm paying taxes.
And you pay taxes on the net profit with the cash that doesn't exist, right? And I think a lot of gym owners are nodding their head right now. They're in the car, like driving down and heading to the gym. And they're like, this is the same problem that I'm facing. So explain why or how somebody can show a positive net profit, but then have no cash.
Yeah. I would have to say, the one of the biggest ones that you don't realize is the owner's draw.
Sure.
You know, at the end of the day, the bottom line of the balance sheet, you got the equity portion of the owner's draw that you're taking cash out of the business. So you can look at the net income and then you go back over and look at, the distributions was 10 times, the amount of net income. And that's where our cash position is where it's at.
Okay, sure. That's one. Okay, so owner draw, you're paying yourself outside of a paycheck.
Yes.
Through just a ATM or a check to yourself. Doesn't show up on the expenses on the P&L, but it drains your business account. Now, granted, you put it in your personal account. You probably spend it on something.
I was going to say, it probably went out the door. Yeah.
Okay, so that's one way. Okay.
And the next is expenses that you've put on debt.
Okay.
Right. So you were able to maybe write off that expense last year and get the deduction on the P&L last year, let's say. But now this year we're paying back the loan.
Yep. So
or the credit card.
Sure. Put it on. Loan repayments, unless it's interest expense.
Interest is on the bottom side of the P&L, but the principal balance of that is gone.
Yep. Right. So that goes on. Right. So does everybody understand what he's saying? So you have debt. And you're making payments. But those payments aren't showing up on your P&L, just the interest, because that's the fee of the money.
Right.
And that's going on your balance sheet. So you go and you show profit, but there's no money because you've been paying off the loan.
Yep. And the more leverage you go out and grab, the bigger difference there's going to be between the net income and your net cash of the business.
Absolutely.
It's such a cruel game.
And that's where people get stuck because as we know, right, cash allows you so many opportunities, right? And I mean, obviously when it comes to growth and scale, that's the lifeblood. I mean, that gives you the ability to go and market your business and multiply that capital. And if you don't have any of it, we've all worked with them. I mean, those gym owners that are cash strapped are the hardest to make anything in their business happen. Yep.
You can grow. You can actually go out and lending's easier. You go out to a bank, you have cash, you got liquidity, you got your less risk at the bank.
Right.
Yeah. And that's a big one. I mean, we've talked to gym owners, just their willingness to even acquire debt or things like that to advance the business is a big, I mean, there's reservations around that. They're like, if I don't have it sitting in cash with enough cash for me to consider, not have to worry about spending the money.
Well, that's that whole Dave Ramsey approach, right? Dave Ramsey is like, you don't go into debt. You just don't do it. I know a lot of people that, that would help.
Sure.
But business owners probably shouldn't listen to Dave Ramsey. I'm just saying, it's not for the business owner type person because you can leverage debt and grow your business tenfold by just incurring the debt, right? I mean, like you need money to sometimes to invest into marketing or coaching or something to move the business forward, but they back off because, that's bad, right? Quote unquote.
Yeah. Dave's doing a hell of a job out there talking to the general public.
Yeah. The typical 9-to-5 employee.
Yeah.
Sure.
Yeah. And debt's one of the greatest tools you can have in business to grow it. Right. But you have to manage that debt. It's probably a little less attractive now than it was a year ago.
like half of this attractive. Let me ask you this, going back to that net profit and everything. What about an equipment expense above $2,500? Does that not show on the P&L because it's a capital?
So yeah, you could bring that over into the balance sheet, and then you can write off and depreciate that over time, and you get deductions on that this year, next year, and beyond.
But that doesn't show on the balance.
Doesn't show on the P&L. No.
Right. There's another way, right? So like, say you went off and you bought a new treadmill, Rogue Rack, Sornex or whatever.
Yep.
That took cash to buy, but it doesn't show up on the P&L as an expense because it's a capital expenditure, which is equipment, anything above $2,500, right?
Right.
Okay.
Yep.
Okay. Look, I've had to learn all this stuff because I'm constantly looking at my numbers. I'm like, why? Right? Especially in the beginning, right? Like, it looks like we're doing good, but my bank account sure as hell doesn't tell me that.
So at the end of the day, then follow a system for your cash so you can keep track of it.
Yeah, which you like profit first?
Absolutely. I'm a huge fan. I teach that. We actually have a FIT Pro profit formula that was completely built off of Mike McCallow's theory. So read the book. And what I've done is just built in a few less accounts just to make it a little bit more simpler for the early entrepreneur to figure that out.
Okay.
There you go.
So that's kind of like your ground floor baseline foundational stuff.
A little less accounts to keep transferring money.
Yeah, because that can get granular if you want.
Yeah.
I mean, you can get real deep with that stuff.
Don't get me wrong. The theory, and he didn't invent the envelope system or the pay yourself first, but he did a great job articulating it and putting it in the book. And I just took it one more step, just simpler. We built out the formula that would be on our website. You could grab too, but at the end of the day, we're creating your operating account, and then we're going to be moving money over into profit and for taxes.
Yeah.
There you go.
Right? Keeping it simple, right? So we know our taxes are taken care of. We know we have a guaranteed net income at the end of the day because we're putting cash into that.
Beautiful. Yeah. And that's where, so profit first, right?
Profit first.
By the way, guys, Mike McCallowitz is our keynote speaker at the Growth Summit coming up in June.
I can't wait. I want to meet him.
Yeah. You never met him? Really?
No, not in person. No.
So somebody like you, who's a financial nerd, you would like, that's your like legend right there. You wrote the book, right?
He's the guy.
He's the hero. Yeah. It's, we're excited to have him, but like, financials and gyms, this is like, it's almost like oil and water.
Yeah,
right?
I was going to say that. I mean,
like, for whatever reason, there's some hesitation with gym owners.
I think it's an entrepreneurial thing. I think it's because finances are one of those things that you have to grab and you have to like either stick to them and know it. And this is how we run our business and everything comes to the numbers, or it's one of those things that's like, I don't want to address these. Like if I look at it, God forbid, you know what I mean? And I think that fear keeps a lot of gym owners from actually using these types of things as a benefit to their time and energy. They're afraid of what they're going to find out as opposed to being ahead of it and proactive and
they know it's
attacking.
They know it's bad.
Yeah. Right. But it's one of those things like if it's bad, it's going to be bad. Like you're not just going to ignore the problem. It's going to just all of a sudden, correct itself.
Is that the entrepreneur, just the chip on our shoulders that we have the confidence we're going to eventually outrun it?
Yeah, that's what I'm saying. I think the fact that if we can kind of call spade a spade and say, hey, this isn't one of the areas that I'm good at. Like, let me seek help. Let me reach out to somebody. Let me pursue the knowledge I need in order to make this an area of comfort and growth as opposed to something that they resist and run away from because they go back to doing what they do. And that's driving themselves into a hole typically.
And guess what else? And when you go out and seek that profession, it's another added expense.
Yeah, there you go.
Right?
True.
Initially. I'm going to preface with initially.
Of course, right?
Yeah.
Initially, it's going to be an expense that you're going to have to bear for maybe 3-6 months to a year to get things implemented to start shifting and turning this thing around.
I agree. Let me ask you this on the profit first model. Is there a software that exists that automatically distributes percentages into each account?
I haven't found one.
Why don't you build it, man? Because honestly, because, like you've got the income account.
Yep.
What happens like at the end of every day? It automatically distributes 15%, 10% to this one. This and it's a daily. It's a daily or a weekly distribution cycle.
Honestly, it should happen at probably the merchant space.
Mm-hmm.
It could top line, but what if you're getting a check and you're getting,
sure.
Like, let's just get it in that account, and then daily it runs off the bank. Like, I don't know if anybody's out there
if
like,
it has it. Reach out.
Yeah.
Because I've searched all the institutions. They don't have a percentage base and a reoccurring percentage base.
Why don't you build it, dude? Like, there's opportunity
plug in,
there.
Yeah, plug it into license that to them, and
Heck yeah.
You and Mike McAllowitz get together on the deal. You know what I'm saying?
We might have to have a conversation in June.
Honestly, like, I would buy it. You know,
yeah.
and it could be based on a percentage of total money moved.
Yeah, because once it's implemented, it's done. Because that's one more thing that you have to add on your list to do. A lot of my business owners that are pretty responsible with their money, we usually do like monthly transfers.
Okay.
Right.
Yeah.
Just keep it simple for them. But if we are close to the line, cash is tight. You know, I do ideally recommend at least weekly.
Sure.
So, you know, have financial Fridays that you go in there, look what happened, and do your transfers. But man, it'd be sweet if it was automated.
Yeah, hell yeah.
Yeah, and you could set it up monthly, weekly. Anyways, I think somebody needs to build it. I'm really excited about software these days. I think there's a big need for it. And it's not just gyms, right? It's any business.
Yeah.
Yeah, anybody who wants to practice that model, boom.
Yeah.
Somebody's about to be a billionaire.
Yeah.
Thanks, Tim.
Damn it.
You're welcome. Well, I've been talking about it for a couple months now. Like, you know, because we do our coaching with gym owners, and I was like, you know, I read it in a book. There was one. It was totally off topic. Sorry. It's short-term rentals for long-term wealth, and this lady ran Airbnbs, and she had a software that did this, but it doesn't exist anymore.
Oh, okay.
Just so you know, it's called like something. Astara or Estrica or something. Anyways, it doesn't exist because I went looking for it. It doesn't exist anymore. So just FYI. All right. So back to gym owners. So listen, most of our clients or listeners are gym owners, brick and mortar, but you do deal with a lot of online coaches, right?
Absolutely. Yep.
I want to throw this out there because, and I think it's almost like shooting gym owners in the foot. Like, I'm a gym owner, right? Yeah. The overhead to run a gym is massive, right? It's, you got your rent and your electricity and all this stuff, you know, staff. Well, I guess staff could be online too, but you go online, you don't have all this overhead. You don't have the rent, the big expense, at least the rent would be the biggest one.
Right.
What are the profit margins in online businesses that you're seeing?
Yeah. So the solopreneur type of margin should be upwards of 70%.
Isn't that crazy? 70%.
70%. So 30% variable and fixed costs, 70% to the bottom line.
Crazy.
And then building out assistant type coach model of where, hey, you're the top of this, and you're bringing on other coaches to do the coaching for you on the nutrition side. You better be north of 40, if not 50.
Okay, because you're obviously paying those guys something.
Yeah.
Yeah, you know, there's something to be said about it. I mean, honestly. But then on the other side of the coin, there's something to be said about the physical, I guess, the ability to coach people in person. Yeah. There's a big need for it.
I think I mean, personally looking at them, I think being close enough to them to kind of understand the differences, but yet looking at it from kind of the consumer stance, I see them as two different businesses. I mean, while they have an overlapping fitness aspect, who they serve, different clientele, how they're serving, different, you know, aspects. True. To me, it's a marketing business and it's a brick and mortar business. Yeah. I mean, that's what it comes down to.
And I think the staple should be the brick and mortar, but this is probably for Tim. Like, why couldn't you just incorporate that?
And you can.
Online coaching?
Oh, absolutely.
Yeah.
Absolutely. And there's a lot of gym owners that do. I just never did. I mean, honestly, it just was one more thing to do. And I didn't want to, like, I mean, I guess the coaches we could probably put something together and do it. Yeah. Because there's a lot of benefits to doing the online coaching. There's an unlimited market. Like, that's one of the strangleholds of gyms is you got like a 5-mile radius, right? Anybody that lives around here, we can talk to him, but guy in New York, right? He's not going to be a client.
Well, and I think you guys would have a step up because a lot of your first clients would be, you're probably members of the gym.
Right. Your past clients could then go online.
And then they're going to refer their friends. You just got an internal system built.
You know, maybe we should, honestly. I mean, there's not a bad reason to do it. I just have it, right? I don't know if I've been resistant. We did the Zoom thing for COVID, and we still have some Zoomers, right? They jump in and we'll Zoom them in, right? Which is cool because they're training with their old friends. That's kind of cool, but it's like a fraction of like a percent, right?
And it could be a distraction too. I mean, you got the one thing that needs to be the one thing, but I don't know. They're so closely related, in my opinion, that.
Yeah, I think to the other end of or not the other end, but I think that again, it just comes to how you market it, because again, it's not the same clientele. We've seen that some of that, trying with gym owners that have launched kind of a hybrid model and things like that. It gets muddy when you think that it can get muddy if you think that the people that are walking through your gym is all you need to know when it comes to marketing for online.
Sure,
because I mean, most of those people aren't walking into a gym because they don't want that. Or the other end of the spectrum, the people that are walking into your gym are walking in because they want that full accountability, the added experience. Hell, getting in the car and going to the gym is half of what they need just to get their workout done.
Very true.
Right? So if I had everything available in my own home, am I still going to do it? Like, you know what I mean? So like there are, again, massive overlaps. But to think that it's a one-to-one, or to think that, just because we train people exceptionally well within the four walls of our business, and we can hold those people accountable and bring all of that stuff to the table.
Yeah.
Transitioning it to somebody who doesn't ever walk through your four walls is not necessarily the same thing.
I was just thinking, of leveraging your already overhead. You probably already have a marketing team going, right? You already have coaches, you could just utilize more of their services, bring that on.
Not a bad idea.
It's definitely out there.
Yep. Well, I mean, there's gym owners that are doing it, so I mean, we can go listen to that. But let's go back to financials for a second. Let's go back to the gym owner that's making all the mistakes in the world, right? He's he or she's running their business from the seat of their pants. They're going in today. They don't know what's in the bank, or maybe they only look at what's in the bank as their pulse check, right?
Right.
And they're marketing frivolously. They're selling as hard as possible. They're, somebody walks in and sells them a new gadget because it's a whiz bang thing, and they buy it. Like, what are the biggest mistakes that you see gym owners making today?
Yeah. Those all those fun gadgets. I remember. I think I made a $20,000 mistake back in 2009 on that.
Everybody has, right?
The part of a KPI, key performance indicator, that we want to track, and the clients we want to track, is the 90-day forecast.
Okay.
Of cash. So you got to have your net cash position, your current position of cash, and we got to be able to forecast 90 days out. We have to know what's going to be happening as far as our obligations coming up to 90 days, so we don't run out of money.
Okay.
Right. And you can't have that data if you don't have the past data.
Sure.
Right. So that's why it's very important to be up to date on your books, have good books. And then from there, you know where your cash is, and then you can easily project out 90 days at a time. So when you know if, hey, we're getting at capacity, I'm going to have to bring on another coach, going to have to bring on an administrative assistant. Can I afford her or him in the next 45 days?
And it's not exactly what you have in the bank today. It's that forecast.
Yep. You have to forecast your revenue. So obviously we got data. So now we're in December, we got 11 months of data. So we know what kind of members we've added each month. We know what the average revenue is. We know what our average expenses are. So it'd be pretty easy to put together the next 90-day forecast.
Should be.
And then what capital expenditures that we have coming up.
Yeah.
So I feel like if you could nail that part, it would solve a lot of problems. And I think people would make a lot more informed decisions in business.
Okay. So you're looking at your 90-day cash flow, and there's one of three things going to happen, right? You're negative, you're even, or you're positive, right? So let's just take each scenario. What happened? All right. So you look downhill and you're like, shoot, we're going to be running out of money in 90 days. Yep. What's the game plan?
Yeah. At least we have options now.
Okay.
If we wait too long, we don't have any options.
Yeah, you call it money down, right?
Right. So now we can go seek funding. I heard a brilliant method this guy Tim Lyons did here a couple weeks ago.
What's that?
Was that lifetime memberships or something?
Yeah,
Raising capital.
Yeah. Yep.
There's so much you can do if you have the information. Mm-hmm. You can make an informed decision. You go out, seek some lending. Honestly, maybe you could pull back. Like, it's just not in the next 90 days to do this capital expenditure. We're gonna have to prolong it.
Yep. Okay.
But you don't know what you don't know.
That's great. So, all right. Well, then what if it's positive, right? So you can decide.
You can put the foot on the gas, keep rolling.
Okay.
Or now you can go to the drawing board. What have we been looking at adding?
Yeah.
Right.
Yeah. How can we make this better? Or
what's another profit center? Yep. What can we do?
Yep. Or what's a big marketing play? We can start driving more bodies in here. Press the gas. That's my line.
Yeah, right. Press the gas. I instantly thought, oh yeah, let's apply that back to marketing. Like, look, we got money for marketing.
Yeah, a lot of our kind of thought process is to lean back on marketing because it's really one of the only things you can do that you can multiply capital.
Yeah,
you know, that's the kind of the whole point of business, right? Let's multiply. Let's put $1 in, get 5 out.
Yeah.
Well, to that point, you asked, you know, what do you do when you have capital? And you turn around, you go buy that thing for the gym that everybody's been talking about and everybody wants. All right. Well, how long until we talked about in the Iron Circle today, right? How long until the ROI shows face? Yeah. Marketing's a quick way, right? We see that money coming back. You buy a new piece of equipment. Is it bringing in more clientele? Well, yeah, that's exactly. How do you put that number, you know, where do you get that number from to associate a true ROI?
I don't think you do.
There's no real way of attributing that actual number there. So I think marketing is one of the only ways that you can go in and actually flip a switch and watch the business grow and scale.
Yeah, that's spot on.
Yeah. Well,
that's huge. And that's the hard part. All of this stuff goes back to what we talk about all the time. Like, this isn't the sexy side of fitness. This isn't the fun side of running a training gym, but this is the stuff that takes.
Well, I think you'd argue it is the fun part.
Well, well, it is because you have control of it, right? Yeah. Like once you know it, I think that there is an aspect of fun because now it's not the lack of clarity and the stress and the holy shit, the world's burning down around me. Right. Now you're in the driver's seat making the decisions of the business.
Yeah, absolutely. When you can make an informed decision, feel confident about that, it allows you to sleep at night. Yeah. I mean, when we're talking 90-day forecast, like there's not one time you're going to nail it. Mm-hmm. It's a forecast.
Sure.
Right. Like things might not go as planned, but at least we have a projection, right? At least we have an idea of what we're going to do. And I think that would be the game changer for a lot of gym owners if they knew where their cash position is and what's coming up.
So why wouldn't they?
Well, there's that thing of avoidance again to get the numbers up and to go out and work with someone. And I think, honestly, they could do it themselves if they wanted to.
Is there a button they can click on QuickBooks?
No, unfortunately.
Unfortunately.
Yeah.
Is there an overnight $97 course that's going to give them the answer to taxes?
Yeah. No, we do have some templates and some spreadsheets that you could use on some forecasting if you needed to.
Okay.
Or that would be called, reaching out and having like a fractional CFO, helping you out in your business, that side of the business.
And you offer that, right?
Yep,
right.
Absolutely.
Guys, when we talked about this exact thing, 4 episodes ago, and said, there's no one problem. There's no problem you can be facing in your gym that we can't figure out how to solve, right? Like there's nothing that hasn't been solved yet. There's nothing that gym owner that's sitting in, Calabasas, California or whatever, that's looking at their business that has a problem that hasn't been solved yet.
Yeah.
This is one of those things, right? The financials of your business always seem to come up. Very few gym owners just nail this. Like, I'm dialed in. I get my weekly reports and I get this report. My forecast is done and I know my tax write-offs and my profit margin. Nobody's doing that, like 1%, right? So if somebody needed help, what would you say, or how would they get in touch with you?
Yeah, I'd suggest heading over to fitcfo.com. Looking through the blogs, podcasts, some downloadables we have, read up on us a little bit, see if there's a good fit. And then the fitcfo.com/contact would be able to get a call scheduled with me or one of our team members to kind of see if there would be a good fit, right? Because we want to make sure we can add a lot of value to your life. And obviously it's a mutual beneficial relationship. So social media, fitcfo.com, all our links are there as well.
We'll put that stuff in the show notes. So you guys, if you're driving, you don't have to pull over. We'll put it in the show notes, guys. If you want to check out Shawn and his team, if you need help there, reach out to him, click the link, let us know if you have any questions. But Shawn, thanks for flying in specifically for this podcast, man.
Tim, Randy, I appreciate all you guys do and give back and having me on here. So
absolutely.
Love it. Thank you.
All right. Go enjoy the rest of the day, guys. That's it for this episode. Until next time, keep changing lives. We'll see you on the next show. Bye. All right, and thank you for listening to that episode of the Built to Grow podcast, where we help gym owners win. Now, do you want to connect with me and other gym owners online? All you need to do is join our private Facebook group, Business Talk with Fitness Professionals. Just head on over to Facebook and type in Business Talk with Fitness Professionals, and when you do, we're going to give you our 10 marketing strategies 7-figure gym owners use to win. I look forward to seeing you in the next episode. Until then, keep building something great.